Hi friends, I want us to engage a little bit. Today, we are going to talk about how to double your money in the Nairobi Securities Exchange. Is it really possible to double your money? Well, I'm crazy enough to think and to say that it is possible to double your money at the Nairobi Exchange in 1 year. I'm also crazy enough to think and to say that it is possible to double your money at the Nairobi Securities Exchange in 1 month. Let me give you an example. An example that I gave you last time of Nation Media Group. That was 9 shillings by August 2020 and was 19 shillings 30 days later, giving you a return of over 100% in 30 days. That is the kind of return I want us to get. That is the kind of return I want us to get every single month. 100% return per month. If we repeat that every month for 12 months, we'll have a return of 1,200%. That is crazy returns. And that is the kind of return I want us to get. And that is the kind of return I want us to aim for. Even though I'm aware that at minimum we can get 10% per month, which is 120% per annum. I'm crazy enough to think that if the market goes well, if the market does well, if the market moves in the direction of our prediction, and the prediction I'm using here is Holt-Winters exponential smoothening. The method of stock prediction that I've been using over the last 3, 4, 5 years, that I've been studying over the last 3, 4, 5 years as I studied my master's program at the University of Nairobi. And today, I want to engage you a little bit. You know, the financial institutions, the banks, they have been telling us that if you put your money with us, if you save your money with us, you'll get a return of 5%, 6% per annum. Do you know what that means? In 30 days, these guys will give you a return of 0. Not even 1%, 0.5% per month. 30 days of waiting, you give somebody your money and they give you 1%, 0.5% per month. That's crazy. That is not the kind of thing I want us to do. I want to help you make more money through the Nairobi Stock Exchange. Why should you waste your money time banking with the banks? No. And even circles, the best circles give 14% per month, or 14% return per year. Some give 12. The circle I was in, they were giving me 3% return per year. I decided to quit. There are better returns somewhere, my friend, and I want you to give it a try. Nairobi Securities Exchange. And you know what? This will work. I want us to work together. I want you to follow the steps that I'm going to give you. And the steps that I'm going to give you today is more of resistance and support levels. Let me tell you a story. When I was growing up, when I was a little boy, we used to play football. Our football was not made of leather. It was made of polythene that you tie around with ropes. We used to call it ajuala. And as kids, we would enjoy playing that ball. Then, of course, once a while, children from the city, most of children from Nairobi, they will come with some improved balls, leather balls, that you would bounce down and it rises up. Now, there's one thing about that thing that I want us to investigate further. When you drop a ball down, it rises up to a certain level. You drop it down again, it rises up to a certain level. You drop it down again, and it rises up to a certain level. Now, the ground becomes what I will call the support. And as it rises up to the maximum level, that is what I'll call the resistance. The stock market behave the same. They have the support levels and the resistance levels. Sometimes stocks drop to a given level. Up to that level, the buyers are buying like crazy. And the sellers are also selling like crazy. When the sellers run dry, they are no longer selling, the buyers start increasing the demand. They want more and more shares. So what happens? The shares rise up. And they keep rising up like the ball, the football that we used to play with like kids. The improved football, the improved ball. We used to call it a BCD. Of course, there are some other small balls small enough for our legs, not the big balls that the footballers use. Then the stocks keep rising up. The stocks keep rising up. The stocks keep rising up to a certain level. When now the buyers turn into sellers and they start selling. And the demand also, the demand and the supply level kind of balance. And the people who bought at a low price are now selling at a higher price. And they sell these shares. When they run out of the buyers, or other people are no longer buying the shares, and the demand is reduced to zero, the shares starts dropping again. The shares behave like that all the time. And they have been behaving like that since eternity. Or rather from 100, 200, 300, 400 years ago. And they will keep behaving like that for the years to come. They rise up and they fall. They rise up, they fall. And how do you double your money? This is what you will do. You monitor the stocks. As the small-time investors, we behave like hyenas or the vultures. You wait for the big animals, the prey, the big five, the lions, to kill the elephant. After they have slaughtered the elephant, they'll eat a little bit. Then the hyenas will come and drive the lions away. And the hyenas will eat. When the hyenas are full, they leave the pieces to the vultures. And the vultures will enjoy. As the small-time investors, we cannot slay the prey. We cannot slay the wildebeest. We cannot slay the antelopes. We cannot slay the zebras. We wait for the big guys to slay the prey. And who are the big guys? The big guys are the fund managers. The big guys are the pension funds. The big guys are the people who have billions and billions and billions of shillings. The stockbrokers. These are the people who move the market. These are the people who create demand. The banks. These are the people who move the market. They create demand. And when they create demand, you will also join the party. And as the shares rise, double in price. When it's time to sell, you will know. How will you know? In most cases, there will be a very high volume. Like today. Today, leo. Kawuno. The shares of Safaricom is almost 70 million shares of Safaricom is being traded today. What does that tell you? That the big men are quitting. And as the small man, you need to quit as well. And now let me tell you something. Today, I'm reading a book. Day Trading the Stock Market. A book by Jake Badenstein. This is what he says about resistance. Support and resistance are valuable tools for the day trader. Knowing support and resistance levels as well as the existing trend can allow the day trader to accomplish the following goals: buy at or near the support in an uptrend market and take profit either at a predetermined objective or at a resistance. To buy when it overcomes resistance, and therefore to go for a larger profit in as much as the uptrend is likely to remain strong since the resistance has overcome. To sell a market when it falls below support and resistance, and therefore go for the larger profits since the downtrend is likely to remain strong now that the support has been penetrated. My friends, I don't want you to make small profits. I don't want you to make small profits that we are told by the banks and the circles and who that in after 1 year, 12 months of waiting, someone giving you 6%. No, I want you to make larger profits. As Jack Bernstein, is he doing? This guy is a day trader. You see, unlike me, I'm telling you to make profits. After 30 days, you can make 100%. This man makes that 100% profit in 24 hours. Think about it. 24 hours. And that is what I want us to do. Personally, Nairobi Securities Exchange does not allow day trading. So the maximum we can do is to make double percent, the 100% return of our profits per month. That's what I want. He's doing it per day. 24 hours, he's made his money. A second thing that I wanted to tell you is the trend is your friend. How will you be making money? You can only make money when the shares are going up. Last time I was telling you that you can only make money when the shares are raging like a bull. The trend is your friend. That is the only way you are going to make money. When the market is going up, that's when you make money. When the market is going down, you can't make anything. Let me tell you what Jack Bernstein is saying about the trend. The focus of a day trader must be to move with the existing trend rather than against it. After all, prices are cheap. Prices that are cheap tend to get cheaper up to a point, while prices that are expensive tend to become more expensive up to a point. Trends tend to continue in their current direction. Naturally, every trader has his or her own preference. Let me tell you something. Stock move in trends, and you only make money when they move up in trends. A while back, I remember Centum shares. Around 2005-2006, Centum shares was trading for about 6 shillings. Over the years, this stock has trended up to a high of 84, making the investors very rich. But for a while also, it has also dropped in price, and currently it's about 21-22 shillings. Around also the same time, some 2008-2009, there was a stock, East African Cables. The stock rose from 20 shillings to a high of 300, almost 400 shillings, making investors very rich. Those are the kind of trends I want us to tap into. Those are the kind of trends I want for you. Can we do it? Yes. Do stocks do that? Yes. Can we spot them? Yes. Can we make the money? Yes. We can make money. I want you also to remember something. something that Jack Bernstein says. There are two ways of investing. Either you can invest following the fundamentals. Fundamentals basically following the earnings of a company. Is the company making good products? Is the company having a good management? And a lot of many things. Or you can trade based on charts. And I want you to hear what Jack Bernstein says. Personally, I'm not a fundamental trader. I'm a techno fundamentalist. You trade based on fundamentals, and you also trade based on technical analysis. But a pure technical analyst trader, this is what they say about fundamentalism. The technical analyst or the market technician has a large arsenal of tools to work with. It is only necessary to know that the true technician is not at all concerned with the fundamentals or their expected impact on prices. In fact, the pure technician will do his or her best to completely ignore the news and the fundamentals. There is no place in the job. They have no place in the job of technical analysis. In our next video, I will discuss more on this technical analysis, and I will discuss more on fundamental analysis.